So hello YouTube, welcome back. It's Scalping here and I'm back with another one. So today I'm gonna do a breakdown on a trade that I caught on EUR-USD. This actually was a request for one of my YouTube viewers, and he saw actually that I posted this on the free Telegram group, the trade that I caught, and he kindly asked for a breakdown, so I decided to give it to him. So give it to the YouTube community. I really appreciate the support on everything, guys. So I decided to give you guys this one. I'm gonna I'm gonna show the seconds confirmation on this one. I usually don't show the seconds, but I'm gonna show basically how I caught the trade, because some people ask like, how are you able to catch 1 pip stop loss trades, right? But that's what happens when you go down on the lower time frames, right? So another realization that I had in trading, I just quickly wanted to talk about this, is that I found out that the market is kind of like automated. So basically what I'm trying to say is that whatever has happened yesterday is going to happen today and is going to happen tomorrow. So that's one of the reasons when you look at these patterns, then you can end up some people end up coding this and putting on robots and EAs and stuff, because they are very repetitive. It's kind of like you can predict. You don't know when it's going to happen, right? But eventually it's going to happen. What happened yesterday is going to happen tomorrow, is going to happen, the next week, whatever, right? So, but, no matter what you do, you have to understand that you can't win all the time. You're going to have, winning periods, losing periods, but it's all about risk to reward ratio. Risk to reward ratio is going to make sure that, when you're right, you actually get to make more than when you're wrong. And that's what trading is. We need to accept wins and losses. I mean, that's what trading is, guys, right? And that's what life is, basically. We don't always, we're not always happy, we're not always, feeling good and stuff like that. So it's important to embrace each moment. Eventually it's going to pass, you're going to be good again, you're going to feel bad, don't worry. Eventually you're going to feel good, okay? So let me talk about the breakdown, right? So on this one, let's quickly look at it. I'm just going to start from the daily time frame of EUR-USD. I think a lot of you guys already know what's going on the monthly time frame, but for the sake of this breakdown, I just want to roll with the daily time frame, right? So let me see what's going on with the network here. Okay, good. So we're gonna start from the daily time frame. Basically, if we look at the daily, I think everybody can see that the daily structure is bearish, right? We had this high, this low, then this high into I should say this is a weekly supply zone. So then we had the change of character on the daily, mitigation of a supply zone, then a second break of structure. We have 2 supply zones that I'm looking at. This one, which was the decisional buy, right? In this candle, you have, in this kind of like doji candle, you have a buy candle on lower time frame. So this was basically the last buy before the sell that finally took out the daily previous low, correct? So then you have this one at the extreme right here. So let me see what's okay, good. So let me delete that. Okay, so we have this supply zone and we have this one at the top. Now we drop down to the 4-hour time frame real quick, so we can look at it at the 4-hour time frame right here, and we can see that we have these candles that I was talking about. We have these bull candles before the down move that finally took out that daily swing, that swing daily low. So what I'm expecting actually is to see price eventually coming up into this supply zone, and then we have the continuation to the downside, or price may decide to eventually continue up into this supply, because we have a ton of imbalances sitting above, and then we have the continuation to the downside, right? So for this one, this actually is a scalping strategy that I want to really show you guys how you guys can have trades without looking at the 4-hour, just looking at what's going on the medium time frame. So our medium time frame right here is going to be the M30. Okay, I'm gonna look at the M30, M15, M30, M20 is all the same thing. Okay, so let me bring price back to the trade right here. So that's basically what I saw when I was looking at the charts. if we look at what's going on, even if I go to the 1 hour time frame, because I also consider 1 hour to be a medium time frame. So M15, M20, M30, 1 hour medium time frames, right? So if we look at what's going on is I looked at the swing structure, right? So I said, okay, we have this low, we have this high, we have this low, and then we have a break of structure right here to the upside, and then we have a ton of imbalances right here sitting below, and we have this unmitigated, demand zone that had swept liquidity. So we push down, we have a V-shaped recovery, push to the upside to break that medium time frame previous high, right? So then I said, okay, I'm waiting to see that pull back. I want to see that pull back into the demand zone, and then probably a continuation to the upside. So I said, okay, I don't want to wait for price to come to my demand zone, and then eventually we get a violation, and I missed, an opportunity here. So this is part of the counter trend. It's like, okay, medium time frame just turned bullish, right? So we have a break of structure on the M30, for example. So this is the demand zone sitting below that we want to see price coming back to. I looked at this one as well, but what I saw is that there is some relative equal lows right here that most likely are going to be swept before price probably continues up. That's what I figured. So I said, okay, I don't think this demand zone is going to hold, right? And we have, equal lows right here and imbalances sitting below. So most definitely price might want to come down. So I dropped down to M30 because I wanted to see clearly the demand zone, right? So you guys will be able to see right here. That's the demand zone that I was looking at, and we can see the imbalances sitting below. So all of this is just liquidity right here. And then we have this equal lows, liquidity, okay? So I said, okay, M30 just pushed to the upside. I want to ride the M30 pull back towards its demand zone sitting below. So what do I need to do? I need to drop down to lower time frames and then look for the confirmations. So I ended up coming to M5 on this one. So I came to M5 time frame. I wanted to see the structure shift, right, on M5, that we have shifted from bullish to bearish. So if we look at what's going on here, is we had this high, we had this low, and then we had this high. That swing, right? So we can see that we had the first break right here, right? So we had that break right here. This even was like the initial reaction at demand zone. Price pulled back a little bit, and then we have a violation, and that's when I got into the trade, right? So once I saw that break, I said, okay, M30 is ready to have a pullback all the way down. So I ended up refining this point of interest. So if I come down to M2 time frame, you guys will be able to see that it was a very, a long candle right here. It was very clear, and we can see the inducement here because price kind of like came back into almost into the TP, almost into the point of interest, came down, but it failed to close below the M5 previous low. So then price came back. So that's when I waited for price to reach that point of interest. So as you guys already know, I like to use the seconds because seconds allow me to have that added layer of confirmation, right? Which dramatically reduces the stop loss and increases dramatically the risk to reward ratio. So once price got into the POI, that's when I dropped down to 10 seconds time frame. So the 10 seconds, you guys can see I have the high, I have this low, I have the high, I have the low. Then price came, it pulled back a little bit before it made a new high. So this was a high. This was the decisional low responsible for taking the high. So some people will say, okay, but mentor, you have the high and you have the swing low right here. Why you didn't wait for price to break? But you have to understand that this high was only broken after we had this last pullback before the high. So I said, okay, this is the decisional low that took out the previous high, the swing high. So once I have that break, I'm into the trade. Once price broke it, I hit market execution on MT5, 1 pip stop loss, and I managed to break even once price took out this low. So I think I was break even like 40 seconds, 45 seconds. I was ready to break even. So my entry was at 93 right here. I had a 1 pip stop loss on this boy, and it was a very good one. Just targeting the M5 previous low, you guys can see is a 1 to 9.4. If you risk 1% and you're patient enough to just allow price to go all the way to your TP, you would have made 9 times your risk right there. So that's when I took about 90% volume of a 1 to 8 point something, almost 1 to 9, and then the news kicked in and just started to push price all the way down. So what was the intention? Is to ride M30, ride price all the way to that M30 demand zone. We didn't forget that, right? So that's what was the intention right here. all the way down into this M30 demand zone. You guys can see right here when I said that we have equal lows, right? So this most definitely was going to be used as inducement to trap people to buy from this demand zone, and I mean they all got knocked out. It is what it is, right? Price came down, so we can see a ton of liquidity sitting below, right? So I ended up allowing price to come down. I just left a little remainder. I mean, it was almost nothing, but I just wanted to see how far price could go, and eventually price came all the way down right here. So right here we have about 1 to 69 risk to reward ratio. That's where price peaked at, and I mean, it was a good trade, right? 1 to 69 risk to reward ratio. Of course, I didn't make 69% return. Of course, I don't have the psychology yet to hold trades all the way down to that risk to reward ratio, but it was a very good one, very consistent as always. You know, that's how, you know, you make it kind of like a robotic, right? Because it's always looking for the same thing over and over again. So this was a very good scalping, you know, strategy that, you know, that we usually trade on the mentorship. That's the one I call. I mean, even on, I showed on the free Telegram group one setup that I called this week on GU, which was a beautiful one. A couple people on the group also took the trade. So I mean, it's a very good stuff, right? So right here on the right, you guys have the MT5 execution to see that we walk all this YouTube talk, guys. It's not just about talking. We walk in the talk, right? So we have right there you have the MT5. I mean, it was a good trade. Was able to capitalize about 9 times the risk on this one. So I mean, that's it, right? We rinse and repeat the same thing, right? So if you guys like the video, I mean, make sure to show some love right there on the comments. Make sure to hit the like button for me. If you're new to the channel, subscribe. If you guys are willing to join the mentorship, I mean, very good stuff. Lifetime, I'm gonna guide you towards, you know, the profitability with this very good system. So feel free to, you know, talk to me, reach out. My contact is in the description box below. If you're willing to join the EA service that I just launched, it's a very good one. We can give about I should say 25 to 35 40% return a month conservatively. So if you're interested in that, feel free. My contact is in the description box below, and I'm gonna see you guys on the next one.